Welcome back, ladies and gents. Happy Monday morning to you folks. Welcome back to our crude oil morning prep. We're going from the screen here in Los Angeles. Well, normally we'd go to the trading floor. My good friend and colleague Marty Errico is on vacation here this morning. It is the third week of August. Good for him. Once again, my name is Joseph James. Come out and see me Monday through Friday at 8 a.m. Eastern Time, my live trade room with all of our students from all over the world. We're trading live in my trade room every morning at 8 a.m. Eastern Time. Come out and join me as an advanced member. We also offer a free trial. And, of course, don't forget to touch base with Marty and his partner, Jeffrey, down there at tradersaudio.com. They run a broadcast every morning at 8:50 a.m. live from the NYMEX. All righty. Try turning those speakers up over there for yourself, Prince. Welcome aboard, guys. Happy Monday to you. Let's kick it off. Once again, my name is Joseph. I'm a technical analyst this morning. As a technical analyst, I'm looking at charts, right? So I'm going to have a couple charts up here this morning we'll talk about. And specifically, I'll be using a top-down approach, meaning that I'll be starting with a slower time frame and working my way down to a faster time frame. Now, I know that if I do that, I can find the long-term direction. I can find the major support and resistance levels. And if I analyze what's happened overnight, if I look closely at what happened coming out of London, I can usually get some very good clues as far as what's going to happen early in the trading session. And then if I can anticipate the direction at the open, right, if I can anticipate the price action in that early portion of the trading session, well, I can usually find some very high percentage trades starting as early as 8 a.m. Eastern Time. So keep an eye on this today. We're going to be looking at multiple time frames, going from a slow time frame to a fast time frame. Most important thing, remember, is that we're going to be looking for those trading opportunities bright and early in the session. Now, again, normally my partner in crime here, Marty Errico, will be providing us with our pit analysis today. Marty's on vacation today, so we'll have no pit analysis this morning, but I'll try to do my best here, of course, right, with what we got to work with today. So you have to deal with me for one more day here. Let's get started. Now, first things first, run right over to our blog. As always, each morning we start out with a formal morning prep. Head right over to sidewaysmarkets.com, sidewaysmarkets.com, and check out the link called Crude Oil Squawk and Prep. It's right up at the top there, and that will take you over to our crude oil blog where every morning all the charts that I'm talking about and the commentary is already posted there before we begin. You'll also see the video from last time, right, has been posted below it as well. All right, guys, don't forget you can join the newsletter, and the newsletter will make sure you guys get all these updates at all times. All right, looking good here. First things first, morning prep, grab the news worksheet. This news worksheet I update every Friday afternoon. We post it in our membership materials, and of course, we use it on a day-to-day basis. Looking at this worksheet now, whoa, that's a pretty colorful worksheet. You can see a lot of stuff going on here this week. Let's take a look at what's going on here. As we look at the brand new week here, we have a day without any major news. There's no major news here. All right, no major news today. Tomorrow we've got a Red Star news event in retail sales. Red Star news event on Wednesday. Whoa, look at Thursday. 1, 2, 3. Is that 4 Red Star news events? Yes, it is. 4 Red Star news events on Thursday morning. Friday morning we've got another one. So today's the only day of the week that we don't have any Red Star news. Now that's all fine and dandy. Let's think about what day of the week, what week of the month, what month of the year are we trading in right now? Well, what day of the week? Today's Monday. What week of the month? We go by Fridays in trading, so that's the third Friday of the month. It's the third week of the month, right? What day of the week? What week of the month? What month of the year? It's the month of August. All right, think about this now. What is this telling us? Right, this is a very simple way to make sure that you understand what today is, right, and how to be prepared for it. Think about Monday. What is Monday? Monday, first day of the week. Monday, usually a slow start, right? Oftentimes, traders are a little bit sluggish to get back to their desks on a Monday morning, right? Maybe they were out fishing all weekend. Maybe they were camping all weekend. Maybe they're coming back from a long vacation over the last 10 days. There's lots of different reasons in the summertime why traders may not want to get their weekend finished up too early, right? So expect Mondays will usually be a little bit of a sluggish start. What else do we know about Mondays? Are there any typical news events on Mondays? Wednesdays, we get inventories, right? Thursdays, we always get jobless claims. Nothing really on Monday, right? No, there's no recurring news on Monday mornings. Okay, so I guess we know that on Monday, the big concern is personality, price action. The big challenge on Monday is being patient to wait for the beginning of the price action. What's the next thing? Third week. What do we know about the third week? If it was the first week, we'd say, well, the new month is here. If it was the last week, right, we would say, well, we're going to have those Hail Mary trades, right, last week of the month. What week is this? The third week. Anything important in the third week of the month? Absolutely. It's OPEX week. This is OPEX. So now we know the third week is OPEX. Okay, and we're starting to put together some pretty good clues now. So it's a Monday. We got to be careful about the volume early. It's the third week of the month. Now, is that going to affect us today? When does that really start affecting us? Well, it starts affecting us Wednesday, Thursday, and Friday. Wednesday, Thursday, and Friday. Okay, so Monday and Tuesday should not be affected by OPEX. Now, let's think about this in reality standing, though. What month of the year are we? We're in the month of August. What is August known for? August is known for many countries in Europe taking the month off, right? No air conditioning in Spain in the month of August. No, we'll take the month off, right? In Italy, they take the entire month off of August. So there will be fewer traders in the month of August. Now, I want us to think like a pro here. Think like a professional. A professional will try to put themselves in the minds and the bodies of other traders. And what do I think might be happening this week? I think we might have traders using this week as an excuse to get the heck out of their offices. I've got a vacation plan, a little long weekend plan for this weekend, right? I will not be trading on Friday. I could just assume, though, that a lot of traders out there looked at their calendars and said, third week of the month, I might as well take that one. If I got to choose a week to take off, right? If we're taking the kids to Disney World or taking the kids camping, I might as well pick the third week of August. That's what I think, right? But what do I know, right? I may be completely off my rocker, but I think that might be the case this week. So think about it that way. What would other traders be thinking, right? If you only got a few weeks off per year, what would you do with it? You'd probably take it the third week of August off if you were a trader. Moving forward, now we have a plan. Monday morning tells me, be patient. Be patient, grasshopper, right? Do not get that week started too quickly. Plenty of time to make your money this week. Better not dig yourselves into a hole because we can't keep our emotions under control. The third week of the month tells us this is OPEX. Although for a Monday, we don't have to worry about OPEX. The only thing that we do have to worry about is that self-fulfilling prophecy where traders think that, well, my buddy Bob down the hall, he's taking the week off. I can assume other traders are probably taking the week off. I should take the week off too. That self-fulfilling prophecy. And then, of course, we know the month of August is notorious for being inconsistent with volume, lower volume than what we normally would look at during the year. And so we know to be ready for that slowdown of price action and then speeding back up, slow down and speed back up. So that's your day. That's your outlook for today and really your outlook for the week. As you can see, once again, we have quite a busy week here. Tuesday, Wednesday, and Thursday is just chock full of incredible opportunities. So we'll be looking for early morning opportunities here, Tuesday, Wednesday, and Thursday. But unfortunately, here on a Monday morning without any major news, we don't have much to work with as far as outlining what the plan will be today for news. So no major news on the calendar. We do have the Treasury budget this afternoon at 2 o'clock. We'll be talking about that later on this afternoon. Moving forward, let's grab some charts, Joe. Right? Enough chit-chat about the news. Let's talk about some charts. Here we are, guys. Anchor chart first. First chart I always look at is going to be the slowest time frame. This is an anchor chart. An anchor chart's going to be my first time frame because I've got two jobs on an anchor chart. Right? What are those two jobs? Two jobs on an anchor chart. What are they? And again, an anchor chart is just a technical term we use to say it's the slowest of the time frames. Right? What's it doing? It's finding direction, right? Trend. And it's finding support and resistance. That's the most important goal for the anchor chart. I'm not looking for trades on it, right? I'm not looking for market personality. I'm not looking for trading patterns. I'm looking for direction, and I'm looking for support and resistance. Where do we see some direction and support and resistance? Well, it should not be difficult here for us, right? It should not be difficult. We can see that bull channel. Okay, so at first glance, it looks like direction is higher. Okay, first glance, direction's higher. Where's my support and resistance? Support and resistance levels, 105.52 to 106.30, 107.41 to 108.07. We appear, right, now that we zoom in, so again, direction higher, support, resistance, you can see them marked up very clearly on this chart, okay? So we'll be using those levels throughout the entire day today. We zoom in a little bit. It doesn't take very much to look at this here, a little bit closer to see that, not so fast. Looks like we've been moving higher ever since the, about halfway through the day on the 8th last week. I believe that was Wednesday last week. We had that change in direction. As you can see here, we are moving higher, but boy, in just the recent short term, the last 12 hours, we've seen this start to go sideways. Now, this sideways range tells us it's probably accumulation of contracts. It's probably accumulation. As we move higher here, you can tell we're moving higher into that reversal zone. We see the price start to trade sideways. This is most likely some accumulation as traders are anticipating price to go higher. If for some reason it's not, right, I really don't care what it is, to be honest with you. As a day trader, we resist the temptation to try to understand everything. Does it really matter why, right? Does it really matter? No, it doesn't. It doesn't matter why. I could act like I'm so intelligent and well, it's this and that, and this news affecting that, but who cares? I mean, nobody really cares why it's doing it. I mean, I can impress you. I can impress my friends at happy hour this afternoon, but it's not going to make me more money, right? Knowing exactly why won't make me more money. Knowing when and knowing where and knowing how. Now that's, right, those I want to be paying attention to. So here we are now. I can tell inside of this range, we're going to be going sideways. That's fine with me. I'll buy the lows. I'll sell the highs of that range all day long, right? We'll use our two-step patterns. We'll use our reversal patterns to buy the lows and sell the highs. Little scalp trades all day if I want to stay inside in this range. I will also be looking at fake out breakouts too, right? You got to assume a sideways range like this can lead to a fake out breakout. In all reality, if we go higher here, right, I will expect prices to move higher to that 107.41. If we end up going lower, I'll look for it to head down to that 104 big round number. I got 103.62. That'll be just about where we're going to see price collapse to, right, 103.62. We'll probably see it somewhere around that 104 even, right? 104 even is where we're looking at the price to drop. 107.41, that's where the price is going to be headed to above us. Okay, moving forward now, that's an anchor chart. Anchor chart, again, direction and major support and major resistance. Now we move to a 5-minute chart that's been turned into a 30-minute. This is a 30-minute chart. Yeah, it's a 5-minute chart dressed in 30-minute chart clothing. I kid around with you guys about that because we usually use a 5-minute chart, but a 30-minute chart here does the exact same thing. A couple things you want to see here. First clue, coming out of London this morning on this 5-minute chart, or on this 30-minute chart, excuse me, we normally get about $1 range coming out of London. We have a measly 68-cent range right now, maybe less, maybe 65 cents, depending on my drawing tool there. What does that tell us, right? Narrow range, very, very big clue. Narrow ranges usually mean narrow ranges throughout the entire day, so just be aware of that. So we get a narrow range coming out of London. Second thing we can see is the long-term trend is higher, right? Third thing we can see, which is a very, very big clue, the previous high of day. The previous high of day, you can see there are actually 3 levels here. There's the previous high of day at 106.24, 107.27, and 107.69. Specifically, the previous high of day I'm talking about is the one at 106.24. That's Friday's high. You can see we're chopping right around on top of it. This is a huge clue that it looks like the buyers are trying. Now the question is, will those buyers be successful and will price jump to that, remember that 107.40 I was talking about earlier? You can see there's going to be an easy path up to that 107.27. 107.70 is right above it too. So getting to that 107.40 on that anchor chart, probably not going to be that difficult if we go higher here. If we go lower, here's the rub. If we go lower, now we're talking about this trend line, this trend channel. The long-term trend is higher, which is a big clue, right? We know that buying is going to be the high percentage trades today, right? No matter how we slice it. We'd like to be a buyer this morning. So we look at this and we say, okay, if price falls, yes, I can trade short, but it's going to be a little bit difficult to find that pattern, right, moving, well, before I get to that trend line. I don't want to sell directly into that trend line. So buying at this channel low may indeed just be the very best opportunity we get today, right, buying that channel low. And as you can see, it'd be right around that 105.15 to 105.30 area, right, to get into that low. So 105.30, 105.15, that range there, that'll be where we're looking to look for a buy opportunity here, buying the lows of crude oil's wedge, or its channel. All right, and then, of course, let's see here. What else we got? Previous low of day, 103.62, 102.22. Those will all be great price magnets. If we happen to take off, I mean, we know what we're looking at for the upside. If we go to the upside, we know we're going to 107.27. If we go to the downside, we're going to have to get through that channel low. Again, if we don't end up bouncing off that channel low, I'll be surprised. This market, without the news today, right, without any major news, and most likely going to be a little bit lower volume, this market may have the tendency to take a tear. It may just fall out of bed, and if it does, we'll be trading short down to 103.62. So if it does happen to take off to the downside, 103.62, that will be our focus, right? That'll be our first target. And then, of course, 102.22, that will be the nice, big, hefty runner target if we feel confident with it. That 102.22 is also the prior week's low. It's also the prior week's low. So we know that we're looking at most likely higher prices here. Tough to tell. We're trading sideways right now. But as you can see, though, there's quite a high likelihood, as you can see, going to new low to a new low of day right now. There's a high likelihood we're going to end up testing that channel low. It all depends on what happens at that channel low. Will we bounce and give us a nice buy, or will we blow right through it and we'll start selling short after we see that proof in the price action? Last but not least here, our entry time frame here this morning is a 600 tick chart. Entry time frame. We're going to move one faster from this in our trade room. So we'll be going one time frame faster than this in our trade room. So members, stick around for the trade room this morning. We'll be trading on the 200. We look at this and it's very easy to see the sideways range. It's very easy to see the price wedge. And of course, you can see now we've recently here broken out of that wedge. Now, a rookie will do this. A rookie will start looking to sell right here, but no, we call this a reversal line. This line right here, this low right here, that's a reversal line. So my number one goal, if I'm going to trade short, is to trade short below that reversal line, right? That's the most important part of this. This is a classic case of a fake out breakout waiting to happen. So look to buy these lows here. Look to buy those lows, look to sell those highs, right? And look for the phobos. Look for those fake out breakouts. Now, one very big important variable today is there is no major news on a third week of August. We know that that may result in lower volume. Lower volume means we may end up going sideways, or boy, we may end up really seeing some wider ranges later on today. We'll have to see what happens. So no major news this morning. Be careful out there with the market personality. As you can see, the sideways range right now is telling us to be very careful trying to trade the breakouts. Wait for the proof of the breakout. Wait for the proof of that new trend direction. We already talked about if price goes higher, if price goes lower. We're ready for both directions. Now, if price goes sideways, we know exactly what to do now as well. So we are ready for up, down, and sideways here this morning. I want to thank you all for coming out and joining us here this morning. Thank you, guys and gals, for being here. As always, my partner and I, Marty Errico from Traders Audio. Again, we'll see Marty here tomorrow. My name is Joseph James. Thank you so much for coming out and joining us. Come out and see me every morning at 8 o'clock in the morning Eastern Time in our live trade room at School of Trade, or drop us an email. That's that's JJ at School of Trade and Marty at tradersaudio.com. We'll see you guys in 23 hours and 30 minutes. We'll be having a Tuesday edition of our morning prep. Tomorrow morning, Tuesday morning at 7:30 a.m. Eastern Time. We've got a busy day in front of us tomorrow. So be here again to see us tomorrow, 7:30 a.m. Eastern Time. And don't forget to shoot me an email if you want an invite for tomorrow's live recording. Have a wonderful day out there. Happy Monday to you. Welcome back to the party, guys and gals, and we'll catch you here next time. Adios, amigos. Bye-bye for now.